Alrighty guys, what is going on? Welcome back to the Best Investing Money Management channel on YouTube. In today's video, we are going to be talking about Home Depot, why I just bought more Home Depot shares, and kind of what's going on with the company. So I hope you guys enjoy it. If you guys get anything in value out of this video, hit that like button, subscribe to the channel. If you have any questions, concerns, make sure you guys ask them down below. So starting off, what is Home Depot and why do I love it? Well, for those of you that don't know what Home Depot is the home improvement store. They sell anything from lumber to plumbing stuff to tools. They sell virtually everything home improvement wise. Now, their competitor is Lowe's, and Lowe's is still a fantastic company, but I definitely lean more towards the Home Depot side for a couple of reasons. But one of the main reasons why I personally love this stock is because of this, right? Home Depot has outpaced the general market, right? The general market averages about a 10% return year over year. Now, Home Depot has gone from $61 at the Lowe's as high as $417 in less than 10 years. So outpacing those indexes, that's key. Not to mention, another reason why I love this company is because Home Depot is what you call a dividend grower. So over the past couple of years, they've grown their dividend by over 115%. So if we actually look at their dividends, they pay about $1.90 per quarter. And a lot of people like to say, well, Carter, that's not worth it. The company's $306 per share. That's pennies. Well, at the end of the day, yes, I understand $1.90 per quarter is not much, right? I get that. But if you compound this over the course of 10, 15, 20, 30 years, this $1.70 will add up to hundreds, thousands, if not tens of thousands of dollars because of compound interest. So all these dividends I get, I take that $1.90 and I reinvest it back into Home Depot. So now this $1.97 is going to be paying me a dividend. So I really start this snowball effect of, pushing a little snowball down that hill, and over the course of years, that snow is going to get bigger, bigger, and bigger, and it's going to start producing a lot more cash flow. Now, looking at their past earnings, they've done very, very well, right? They beat revenue. They beat their earnings per share. They've done very, very well. And looking back at more, you can see they've done very well. So given we've seen a lot of stock sell-off. At the end of the day, anytime a stock goes from $60 to $417, doubling your money and then some, if not times four-ing your money, you're going to have sell-off. And it's all about understanding the market and the stock. So for me, I definitely think that right now represents a very good time to pick up a couple of shares of Home Depot. The reason why is because it has 10 years of fantastic growth and we've just gotten a little sell-off. So if history repeats itself, this will start to build up again and start that upward trend. So drawing out that support and resistance for possible swing trades is super simple. So you can see it does have some pretty hard support near and around this $294 mark, right? It's hit it several times, right? Once, twice, three times. Resistance, on the other hand, is going to be right up here at about $337, right? You can see it's hit it once, twice, three times, four times. This is classifying pretty hard resistance, right? So this is when a stock just has tendency to sell off at that certain price. So pretty much if you're going to swing trade this, what I would do is I would hop in at an opportunity, try to get under and near and around that $300 mark as close as you can. If you can hop in at 300, you could risk $7 to possibly make upwards of $38 to $40, right? Risking $7 to make $40, $10 to make, $40, $50 is a, 4 or 5 to 1 risk and reward, which is very, very good. Okay. Now that's going to be the swing trading aspect. Another thing you have to understand is right now we do have a short-term downward trend. So right now, understanding the market is, yes, sellers are in control of this stock. We need to get a breakout of that 313 to get a push up to these resistance levels. And it's always a lot easier to make money when the trend's in your favor. And that's one thing you have to realize is, yes, it does have a short-term downward trend, but it also has a long-term upward trend. So as long as you understand that and you have that long-term outlook, I definitely think the short-term volatility is gonna pass, right? The market, kind of any reaction in the market is an overreaction, and that's kind of what we've seen. Given their past earnings, they've done very well. It's not like they're losing money. Home Depot is a very stable company, and I definitely think companies like this are a lot easier to swing trade when you have that upward trend. And not to mention, guys, a good strategy if you're worried about this downward trend is to dollar cost average it, right? Dollar cost averaging is a long-term investment strategy that requires you to invest on a consistent basis. I can't even talk. You have to invest consistently to get a good average price for your shares. So if this continues to sell off, you're averaging down your cost, right, per share. Now, when the stock recovers, you make a lot more money because the average cost is very, very low. So that's another strategy that does work well. I've been buying Home Depot for years, so I'm definitely going to pick up a couple of shares and hold it. My average cost is probably near and around, I would say, about 120 to 135, because I did buy all the way down in here during these sell-offs. So I definitely think you have to understand that. I'm super excited to see where this company goes. I definitely think it's not going anywhere. We have that long-term outlook, and you guys will be all right. So, guys, that is it. I hope you guys enjoyed it. If you did, hit that like button, subscribe. We will see you guys later. Remember to stay happy, guys, stay positive, and stay safe out there. This is by far a great stock to pick up if you don't have it already. We'll see you later. Take care.